Business news for you now. Yuka Roy is with us in the studio. And Yuka, the spread of the coronavirus in China and indeed around the world has sparked something of a sell-off in stock markets.
In stock markets, while investors are worried about the potential impact of the outbreak on the global economy beyond denting China's GDP. Although it's too early to put any figures on, some analysts are comparing it to the SARS crisis back in 2003, which, according to one estimate, wiped $40 billion off world markets. Sam Bradpeace takes a look.
From the food market to the stock market. As the novel coronavirus spreads, its impact is beginning to be felt across the world. Many Asian markets were closed on Monday for Lunar New Year, but Tokyo's Nikkei index sank 2% at the end of Monday trading. Across the globe, shares in hotels, airlines and other travel companies fell significantly. Businesses and investors are concerned about the impact of travel sanctions and reduced spending from Chinese tourists over the holiday period, particularly here in Japan.
In particular, we see fewer Chinese tourists. I think there are fewer than half compared to last year or the year before that.
In France, the number one European destination for Chinese tourists, there are also significant fears.
If it lasts for a week or a month in low season, it's not a big deal. But if this lasts for several months, well, 7% of France's tourism business comes from China, and that's a lot.
Oil markets have also been infected, with crude prices dropping below $60 for the first time in nearly 3 months on Monday, owing to concerns about the impact of the virus on demand. The World Health Organization is yet to declare a global emergency, but economically, this virus is already having global repercussions.
Well, with that, let's look at the market figures now. And the fears over repercussions from the virus has indeed triggered a global sell-off at the start of the trading week. As you can see on Wall Street, Dow Jones and S&P both down over 1.3% and the Nasdaq down 1.6% just a little while ago. Travel-related shares, including airlines, holiday resorts, cruise liners and agencies, are particularly hard hit. Major European indices were down even further by more than 2% at the close, with Frankfurt DAX leading the decline. Now, moving on to some other business news. And here in France, the number of job seekers last year dropped by 3.3%, the biggest annual decline since 2008. More than 3.5 million people, though, are still registered as jobless. The unemployment rate was at 8.6% in the third quarter of 2019 and is expected to drop to 8.2% by next spring. The National Statistics Agency says the drop in unemployment is due to hiring growth being larger than the active population growth, with 263,000 new jobs created in the past year. With only 4 days left before Brexit, all eyes are on the next phase, negotiating a new long-term relationship. The UK government has unveiled a 40-member Task Force Europe to lead those post-Brexit talks. The team will be led by David Frost, the Europe advisor to the Prime Minister, who secured the 11th-hour withdrawal agreement with Brussels, signed off last week. Britain leaves the EU at 11 p.m. on Friday and enter an 11-month transition period during which existing rules will continue to apply. Talks on a new deal are expected to begin in the coming weeks. And meanwhile, the Prime Minister of Ireland, the EU country most affected by Brexit, said the 27-member bloc would have the upper hand in future trade talks with the UK. Leo Varadkar spoke after meeting with the EU's chief Brexit negotiator, Michel Barnier, in Dublin. The Irish leader said that to get a free trade deal, the UK would have to give legal assurances it would not undermine the EU's interest. This as Barnier warned the UK not to waste time in order to avoid another cliff edge in trade talks.
I told Michel that I was very ambitious about the future EU-UK relationship, but that hand in hand with that ambition, there has to be realism. And we need to start the new relationship between the EU and the UK on a firm and honest footing, and that means a level playing field. I think if you see this as a contest, the European Union is in a very strong position. We're 27 countries, we have a population of 450 million people, and the single market is the largest economy in the world. But I don't think we have to see it as a contest.
Some more of the business headlines for you at this hour. The Indian government announced plans to sell its entire 100% stake in Air India as it struggles to cope with an economic slowdown. Its initial attempt last year to sell just 76% of its stake in the national carrier failed to attract a single bidder. The potential buyer would have to absorb $3.2 billion of the airline's $8 billion debt burden. General Motors says it's investing $2.2 billion to refurbish a factory in Detroit to build electric and self-driving cars. The plant was originally set to close as part of a massive restructuring plan that would have cut 15% of its workforce. Instead, GM says the renovated plant would eventually employ more than 2,000 people. It plans to start making the company's first electric pickup there in 2021. Canada has started the ratification process for a new regional trade pact with the US and Mexico. It's the only country still to ratify the USMCA, which will replace NAFTA. The minority government has to rely on opposition lawmakers to approve it. US President Donald Trump is expected to sign the new trade deal into law in the United States on Wednesday. And finally from me, it's the birthplace of modern skiing, known for its frosty snow-clad landscape. But even Norway is feeling the impact of climate change, with less and less snow every year. That's prompted it to open the world's largest indoor winter sports facility. Emerald Maxwell has the story.
With more than 200 ski resorts and over 30,000 kilometres of cross-country trails, skiing is big business in Norway. But now it's moving indoors, with the world's largest year-round winter sports facility opening near Oslo this month at a cost of €80 million.
The meaning of skiing for Norwegian as, it's our DNA. Skiing and playing on snow has been a large part of the whole nation and will be presumably.
Nearly a quarter of Norwegians ski, and Norwegian athletes topped the medals table in the 2018 Winter Olympics. But increasingly, Norwegian slopes are faced with a problematic new reality: not enough snow due to climate change.
In Norway, we see that we will have less days with temperatures below zero in the future. And we see a very clear tendency. So it's getting warmer and the winter is getting shorter.
In a country where skiing is as popular as football, that's a hard fact to swallow. So not exacerbating the problem is important to the indoor ski centre. Its designers have created a ski slope that will act as a giant heat pump, generating energy that can be used to heat nearby homes.
It's certainly telling, isn't it, about the impact
Yes.
of climate change.
If you can't find snow in Norway, where can you find it?
Norway, of all places.
All right, Yuka, thank you very much indeed.